Hey everyone, good morning and thank you for tuning in today, September 24th. Market's been open for a little less than a half hour. I'm going to go over a couple of trades that I put on this morning. So if we look through the activity tab, I currently have a position at in the October 17th expiry in HIMS. And what I did here was I constructed a risk reversal. I sold the 65 call and I bought the 50 put, and that was done for a small credit, put for a $15 credit, so a risk reversal. And then this morning I decided so I covered the call, the 65 call, and then I went down to the put side of the trade and I sold a 48 put, and then I sold a 44.42 put vertical. So what that did, and by the way, this was done for a 30-cent credit. So the total trade has a 45-cent credit, and it leaves me with a condor, which is the following. So this should be actually this outer area of the tent should be 45. So there's a 45-cent credit. The reason it's showing less is because it doesn't carry forward the initial construction of the trade. Anyway, I have a condor on for a small credit with strikes. This elbow is 50. This elbow is 48. This elbow is 44. And the outer boundary is 42. So it's a small condor. It's a $2 wide condor between the verticals. And it's on for credit. Expiry is again October the 17th. So I have a few weeks for this to expire. I don't have to do much here. This is the type of trade that when I have this kind of trade on, I just let it ride. If HIMS continues to, it's down a bit today, down $1.83, trading at 54.17. And if it continues to drop in price, then obviously what I'm looking for is for the trade to end up somewhere inside this part of the tent for max profit. It's going to be a small profit. It's just I only have one lots on across the board here. So the max I can make of this tent would be the $200 vertical spread plus the 45 credit. But outside of the lower bound and the upper bound, there's no risk into this trade. Converting it or morphing it into a condor was not something that I had to do, but I did want to just do this and be done with it, so to speak. Okay, 0 DTE time. Earlier this morning, the market looked like just the price action is just some basic tape reading, which anybody who's traded in a pit before loves to think that they're experts at. And when I'm right 50% of the time, it feels like a miracle, at least lately. But anyway, what I did here was I bought the 70.65 put vertical spread for 235, and on the drop I sold the 65.60 for a bit more than the initial debit of 235, 240. So I have this on for a small credit, basically to pay for commissions of the trade, and left myself with the butterfly on for credit, no risk. And if we get to pin the tail on the donkey at the close, then the trade will be worth a little more than 500. But this is a very, 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 very tight butterfly. So rather than looking to pin the tail on the donkey at the close, if it's anywhere around trading for anywhere around $1 with about an hour to go, I'll be more than happy to sell this for somewhere around a buck to $1.25, with starting with about 1 hour before the close. And I'm definitely not saying that the market's going to be in this area around the close, but we're talking about a very tight range, overall range for the day. So something around unchanged wouldn't be a huge surprise. 18 handle range on either side. of the at the money. So again, we're not looking for too much here either way. And if it happens to trade here around the close, then I'll just trade out of it, and that's it. Okay, 0 DTE and HIMS. Thank you for watching. I'll catch you guys next time.